as usual, we are here to learn. And there are a lot going on, right? And you may heard a little bit about the one big beautiful bill, and it is halfway through. The reason we want to bring that up in front of your face again, I know we talked about proposals. The last Saturday when we talked about this one big beautiful bill, we were talking about the proposal, how that was proposed. But today we're talking about a half-finished product which has already gone through the House and it passed the House. So now the next step is the Senate. Once it's passed the Senate, it will go to Congress, become the law. So this is like 50% win on President Trump's side, right? So he won the bill and it is going forward. So let's talk about how that related to everyday people. You know, this big bill has many parts. And for our channel, and we just focus on taxes. The other parts, and also very much related to everyday people, related to seniors, veterans, and everyone else out there. But we are focused on business owners' personal financials. So we want to highlight what might happen to you, for you in 2025. A couple of those ones I really like. So I want to go through that. Let's just dive in, right? And our webinar is really made in the way that you can hear, you can listen to us instead of watching. So if you felt like you want to know but you don't have time to watch, no problem. While you're driving, put us on the speakerphone and you can go ahead and listen to the webinars. Then you can gain your knowledge, right? So this is our, I am displaying communitycpa.com website. If you type into communitycpa.com, you will see this. And what you have in front of you are the function bars on the top where we say on board with us. That's where you can become our client without even needing to talk to us. Then we have appointment. That button allows you to meet us even though we're not in the same area. And we have a cluster of clients in the east side of the country, and west side of country, middle side of country, and the south side of country. So a lot of those locations are not where our branches are. So the internet is helping us to reach out to you, and you can click the appointment and coming to talk to us. Of course, we also have a pay invoice button, which make it so easy for our client to compensate, reward us for the good work we did. And we have portals. We have client portals where when you become our client, all of your information is on there, and you can see your past tax returns, you can see your chart, you can know who is your care team members. So those are all the information there. Payroll portal are for clients who are not doing anything else but just payroll. Then they come to the payroll portal. If you are our client, your payroll portal is inside of your client portal. With that said, I want to show you quickly of our YouTube channel. Our YouTube channel obviously is under YouTube, right? The channel name is Community CPA, and you can type into Community CPA, find all the videos. Right here, if you go to videos, of course there's a button for home. There's also a button for videos. But if you go to videos, it's actually listing all of our videos that we have in our history. Is over 1.3K, 1,300 videos in the system. And if you type in what you want under the magnifying glass, and you will find what you want. Sometimes a same topic we might explain to you in a different time or from the different angle, but they all gonna show up on your search list. So it is a great tool for you to learn real stuff that you need to know. And about our firm, a lot of you know us. A lot of people who hop onto our channel, they know our firm. We have more than 12,000 clients, and we really is the firm that our whole goal, our everyday mission is to help our small business owners. Yes, true. We don't have large businesses. Elon Musk is not my client, so I don't do his accounting. I don't plan his taxes, and I certainly don't prepare corporation taxes for him. So those large clients is not in my realm of understanding. So I don't understand what they're doing, and only just as you, I hear things from media, right? And you learn from other information, but not exactly zooming into the tax return and see what's there. So with that said, we do have a population here. We have more than 12,000 clients that give us a little climate. Like when we talk about, oh, business is doing better or the country is melting down. And when we make statement like that, it's not so much about I know what Elon Musk is doing. It is more about we know what our folks are doing, what the community, small business people are doing. So a lot of times when we speak, we really speak from your point of view. We really speak with your skins on us, so we feel what you feel. So this is where that folks, if you are of small, medium-sized businesses, and if you felt you don't qualify to be in the elite group and the billionaires, maybe you are here. And this is where the true, genuine care is integrated into everything we do. And I wrote 2 books in the past. I'm doing my 3rd one. And I have 4 books in the pipeline that I am producing. And my whole goal is to give my view and my understanding and my experience to the readers. So you know how to start a business, you know how to grow it, you know how to expand it, you know how to retire from your business. So that's kind of the lines I'm walking to finish my 4 books in total. No responsibility disclaimer. Of course, I can't say that there is anyone on earth not making mistake. Everybody do intentionally, unintentionally. So here we can always honestly tell you that everything we put out, we have done our due diligence. So if there is a mistake, it's very much related to timing. Sometimes certain thing we say today is not what we say tomorrow because the rule changed, right? So our goal and our whole mission here is to guide you through the maze of this changing environment, and from tariff tax all the way to Medicare, diminishing from some 8 million people. So all of these things are things that we will address from a small business owner standpoint. This one big beautiful bill is actually a phrase, a term used by President Trump during his 1.0 term. And at that time, he talked about to wipe out Obamacare, replace that with this one big beautiful bill. And it didn't come through, it didn't get done. So that term continued. But this time, the one big beautiful bill is not about Obamacare. It's more about other areas in his campaign promise. So right now, today, we are focusing on just tax policies, right? That one big beautiful bill he has in 2025 promise that include the Medicaid and social programs, and also spending cuts and the deficit impact for the, that related to the Biden time, energy and the environment reduction and other provision reduction. But what we are doing right now is look at what the House passed for the tax side of the world. All right, let's focus on the tax provision. So this is the campaign promise that President Trump had. It's covered those major areas, but we're looking at tax policies. That tax policy, May 9th is the day passed the House. So the primary focus on this particular bill for tax purposes is to look at the Tax Cut and the Job Act of 2017. That was a bill passed by President Trump in his term 1.0, right? So now we are in his term of 2.0, and then he is coming back to revisit that. A lot of those was carried on by Biden administration. So it didn't really make a lot of changes. But here, and because it's scheduled to expire, so they are coming to re-look at this and making changes. So the biggest one, and we will go down the list here, Section 174, it is also called R&D. So R&D, research and development, right? So businesses, especially businesses, are utilizing this particular tax treatment. So under the Tax Cut and Jobs Act back in 2017, and starting in 2022, the business were required to amortize the R&D. Amortize R&D expenses just means that you can't really, let's say you got $1 million R&D expense, you can't really deduct the $1 million off your book anymore after 2022. You need to amortize it by 5 years. So you only can take $200,000 to deduct. So that's Section 174. But what this big bill do right now, the House said that forget about it. They can deduct the whole thing. So that is what that is, basically. And this provision will take place, like you can deduct the whole thing. That starts on December 31st, 2024, which means the whole year of 2025, you can deduct the whole thing. So that is a big deal, right? So the difference, I want to show you with an example how that is different, folks. So let's take a look at the difference here. So I'm using a small biotech startup company. They spend $500,000 on R&D in 2025, right? This $500,000 is a qualified expenditures because they include material, payroll, and all of that stuff. So it's qualified expense. They spend $500,000. In the old rule, like during the Biden's time, because 2022 that stopped, right? The rules changed in 2022. So during that time, this biotech company can only have $100,000 as expense to be deducted in 2025. So they spend $500,000, but on their income statement they can only show $100,000 loss, not $500,000 loss. Make sense? So the rest would be taking out in the future. So the company would do 100,000, 100,000, 100,000 for next 5 years. Of course, the R&D, you can see that to include like two parts. Number one is deduction. Number two is the tax credit calculation. That is about 7 to 10% of that expense. So that expense is $500,000. So you take that 7 to 10%, that give you the tax credit. So what is the tax credit, folks? Tax credit is not a deduction, right? Tax credit is used to offset your tax dollars. So it's much more efficient than deduction. You can deduct travel expense, but travel expense is $5,000, can only deduct $5,000 of your profit. If your tax rate is 20%, means only save $1,000 tax. But if $5,000 is the tax credit, that means if you were about to pay $5,000 taxes, now here comes in the credit, offsetting that to zero. That is actually a lot more deduction in reality, right? The $5,000 tax credit, if it is under 20% tax rate, then that equals to $100,000 deduction. So this is where, when we talk about tax credit, folks, I want you to feel the heaviness on that credit, because it is not the same density like a deduction. So that's the old rule. But the new rule, the House processed over, is to say that, hey, you can deduct the whole $500,000. So you don't have to do amortization. Just make a $500,000 loss. Then you still calculate your credit same way. Isn't that better? Yes, it is better. So this is a benefit. This is a huge advantage for research-heavy industry, for innovations. So this is how government push that to the private business owners. So you think of what you're doing. Now you got this credit, and are you going to take advantage of that? Of course. Just make sure that you find a way to identify the qualified business expense for R&D purposes. So a lot of folks, now it is time to talk to your CPA right away and get that started, because you should book your qualified business expenses accurately for R&D purposes. All right. Some folks will say, well, Ying, that's just going to create more deficit. Let's not worry about deficit. It's not even your worry. Even you can worry. But it's not something you will make any changes to. This is more like water flowing to lower end of the earth. It is by gravity. It is, I'm an accountant, so I of course understand deficit. But the policy is policy. I want you to focus on just what the policy is. Let's not look into too far and too deep and too politically, right? All right, bonus depreciation. What is that? Bonus depreciation is also another big tax deduction for business owners, okay? Sorry. This bill, the House processed through and restated the 100% bonus depreciation for property acquired after January 19, 2025. So, if you bought property on January the 18, 2025, it does not qualify for bonus depreciation. So you may sit here, go throw your towel, go, wow, Ying, what's that? Why? Why 19? What the heck? The heck is President Trump become the president on January the 20th. So that's a statement. Yeah, that's a statement. So know that why that is there, so don't get confused. If you bought the property before January the 19th and you don't qualify for bonus depreciation. And the bonus depreciation schedule is right here in this slide. From 2025 to 2016 is 100% deduction. All right. Then slowing down just like before, 80, 60, 40, 20. All right. The bonus depreciation allows business to immediately deduct a large percentage of the cost eligible capital asset like machinery, equipment, and a special improvement like the leasehold improvement. Rather than depreciating them and over several years, you write it off. So that's what that is. And of course, in this House presented bill, they also expanded eligibility. It also expanded eligibility to say that, it is not limited to new. It also can be used for used property. That's important for a lot of small businesses. If you go to auction house, bought used property, there you go. You qualify for this, right? And qualified improvement property, for example, there are interior improvements to non-residential buildings. Like if you have a commercial building, we did a lot of work to the Houston, Texas branch. We got commercial building, did a lot of work. That immediately make me understand, of course we're still doing the renovation, so it is for sure was done after January the 19th. So I know for sure that is eligible to community CPA's office building. So this is where you need to think. Start thinking what is related to you, right? Certain manufacturing and production equipment also eligible. So let me give you an example. So let's say a small business bought $100,000 worth of equipment in 2025. It doesn't matter if new or old, it all qualifies. This is the House bill, already passed the House. So Senate pass it, then it will become a law. But right now, it is still the House bill, okay? Without bonus depreciation, let's say this thing did not exist, and the small business owners, you can only deduct 10,000 to 20,000 in 2025. So that means if you have a profit of 100,000, you have to pay taxes on the 90,000 because now you can do bonus depreciation, so you can deduct all your equipment right away. But with this new law, if you bought it after January the 19th, suddenly you can deduct your 100,000. So if if your profit is only 100,000, then you don't pay any taxes, right? So basically, it saved $21,000 in taxes if your tax rate is 21%. A lot of dollar difference, folks. So this year, in 2025, if this one goes through the Senate, become the bill, and imagine what we can do on the tax planning, right? Am I worried about the deficit? Absolutely. But am I going to worry about this and then lose sleep? Absolutely not. No, can't help. That is something President Trump should be worried. And I don't have his job, so I refuse to be worried about something is not in my control. But what's in my control is to educate you to know how to save your tax dollars. Right? All right. IPDA-based interest deduction limit. This is interesting. If you borrow a lot of money, you need to know this because the interest expense you paid out, that doesn't necessarily come to be deductible. Don't imagine it is. It's not. Not always. Not all of it, right? So what is this weird abbreviation IPDA? It is earnings before interest, taxes, depreciation, and amortization. What does that mean? Earnings before these items means that if you look at somebody's tax return, you know the profit, and you add back interest, you add back the taxes, you add back depreciation, you add back amortization. So your earnings become bigger, right? It's not taxable income, but it is bigger number, right? Okay, just keep that in mind. Now, the section 163J is all about it. So this thing does magic. So I don't want to bore you with this kind of section code, but let me tell you an example that would help you. So a small manufacturer business has following in 2025, IPDA 500,000, EBIT earning before interest taxes is 350,000. So there are two numbers, right? And the other number, the IPDA, the first number is bigger than the second number, but they are coming from the same company. The reason is different because the first number allow you to add back depreciation, amortization, that stuff. But the second number didn't add back depreciation, amortization. So that's why the earning number is different. Now the interest expense. The interest expense is 140,000. We know it. So under those base calculation, 30% of 350, that's 105 deductible, right? 30% times 350,000, 105. So you have 140,000 interest expense, but we calculated 105,000. That means 35,000 you cannot deduct. This is the old rule. This House bill says that forget about the old one. We want to do IPDA one. We want to do it differently. We want to use 30% times 500,000. So we got $150,000. And our interest expense is 140,000. So that means we can deduct the whole interest expense as a result by using IPDA, not EBIT. So this change literally brought $7,350 tax differences for this small manufacturer. So why do you care? Of course you do. You want to know whether your company would be calculated on what number and what is the deduction. All right? So this is another big one. Now let's talk about individual income tax rate. So the top margin right now is 37%. But if we don't have this bill that House just passed, this one big beautiful bill, the rate will go back to 39.6%. So now this bill made 37% top rate permanent. And you may say that, well, Ying, I don't care about that because my tax rate is not 37. My tax rate is 15%. Oh, well, you're not rich enough to reach that level yet. So that rate permanent is benefiting the rich. Am I right? The people who made more. But I don't have bad feelings for wealthy people to take deduction because I knew my clients are wealthy. They work so hard. They really deserve some break. But this top tier of deduction is for the wealthy. All right? Standard deduction increased for 2025. We sort of expect that every year. So this is not it didn't scratch our back. It is fine, right? So 26,000 for married for file jointly standard, and head of household is 19,000, single is 13,000 from 12,000 of last year. Then of course there is a personal exemption being limited by Trump in the term 1.0. So that stayed the way it is permanent. So they no longer bring that back. So that is something you may not even remember anymore because we didn't have it for quite a bit time since 2017. So we used to have this, I call it a head deduction. How many people you have in the household, you times a number, you deduct that too. We don't have that anymore. So that is gone. So of course we want to talk about taxes for tips and overtime pay. This bill, it is a campaign promise from President Trump to the American who voted him, to those ones who are on minimum wage and struggles every day. So other than they might lose their Medicaid, I don't know how big a deal to everybody. I don't use Medicaid, so I don't know. But this one is geared towards for helping them not to pay taxes. But remember, a lot of these people also don't pay a lot of taxes either. They already on the lower bracket. So the saving probably not going to bring huge amount of deficit. How much taxes a tips person, people who make tips would pay? Probably not a lot, right? So in this bill, they also say that, whoa, if you got other income, and we don't want you to not pay taxes, you have to pay. So they put in the 160,000 threshold, which means that you can, as a household, you can't make more than that. So the federal income tax exemption for tips, federal income tax. So it is not state, federal, okay? It is income tax, so it is not other taxes, just income tax. So make sure that you understand that is coming, and the House already passed the bill, so they present that. So the tips will have to be reported to employer. The employer has to report that on your W-2. Otherwise, you don't get that exemption. You cannot just go in, oh yeah, I got some cash tips. I forgot to talk to my employer. I'm going to put it on my tax return so that I don't pay taxes anyway. No, not good. You have to include that in W-2. All right. And only worker with a valid Social Security number. What that means is when you submit your tax return, if your IT number, you don't get it. And if you are having a Social Security number and your tax return is also processed successfully, then you would be able to. And, of course, the tips, this particular bill is effective from this year, 2025 to 2028. And no tax on overtime pay. Overtime wages will be exempted from federal income tax. Still subject to the level of AGI, so it's not all, right? Apply to worker with a valid social security number. And if the spouse don't have a social security number, it will affect you too. It both has to have a social security number. And the effective date is 2025 to 2028. SALT deduction. Remember long time ago, not long, 2017 ago, the state, we pay a lot of taxes. Like, I live in the Midwest, right? Iowa have state taxes. So when I process my tax return, my state tax that I paid will go to Schedule A, sitting on the state and the local income tax line. So I put in my number, so that would become my itemized deduction, part of the itemized deduction. So President Trump come around, and so he changed it. He goes, no, I don't care, and just want 10,000 maximum. Between your property tax, your sales tax, and your income tax, you can only have 10,000. So that went on till now. But in 2025, they're changing it. What they're doing is that, okay, instead of 10,000, maximum 40,000. So a lot of high-taxed state employee, a state taxpayer, you will enjoy that little increase. Okay, still not as good as before, but it is better than 10,000. Someone was asking me why we make that change. I told them it's because, President Trump lives in Florida, so she forgot. She forgot there's people paying state taxes. That's why that happened. So now she remembered it. So during his campaign, he actually promised that would change. So he did make change, raised that to 40,000, and also with the AGI limitation. If you make too much money, you can't do. You go back to 10. So that's kind of how it is. If you are filing separately, married file separately, you split in half. So that's kind of what is coming. So it's beneficial for Schedule A. And more related to your individual side. So remember, we had this mortgage limitation, right? Mortgage interest limitation to $750,000 for qualified residence interest. That means you can't buy a humongous house, pay so much interest, which is over $750,000, then it will be reduced to $750,000. So that is staying. That is permanent now. And the child tax credit got increased a little bit by $500 per child. All right. And now it says that the child must have social security number to qualify for child tax credit. And this was not there before. So don't move away from here. And I know a lot of tax preparers are using system. They're using tax software, and they put in the number, and your credit showed up. Good, you got the credit. Your credit didn't show up. They don't know why. And you want to know why. If you have a kid with IT number, and they don't qualify for that. So this made it clear. Okay, this is permanent. Then creation of mega account. So mega, what a fancy word, right? And there is a mega account that you can create as a tax-exempt trust account for U.S. citizen under age 18. The funds from mega account can be used for qualified expenses for of that beneficiary, of your kids, such as high school education, first-time home purchase. This House bill provides one-time 1,000 federal credit per eligible child born between 2025 to 2028. This one did not say January 19. I would encourage the mom, well, now it's too late, But if I were in the beginning of the year with ability to foresee the future, I will definitely make the mother hold their babies until the 19 is over. But too late right now. But this one seems to be okay to be the January to December time frame. So for the fancy terms of mega account, and I will bring you more information. The account right now, like they're saying tax exempt trust account, and I have not looked into more details on is it just this 1,000 tax credit or every amount went into there and it will be deducted and how it is being handled. So more details to come. But I fancy that term, mega account. That's why I brought that to you. Corporation tax rate and other provisions. Remember in President Trump 1.0, he lowered the corporation tax rate from 30-some% down to 15%. So when Biden became president, and he raised it back up to 21%. And this House bill retained that amount and maintained 21, did not go down to 15%, which I am surprised. The other thing is they increased qualified business income deduction from 20% to 23%, which has made more money, made more deduction for small business owners. So this one, the third one on my list is read as guilty FDII. These are two terms. I'll tell you, if you don't know what I'm talking about, you're not rich enough. Okay? So you don't have to know it. But what we are doing here is there are other taxes, corporate taxes, lowered from 12.5 to 10.5. So lowered by 2%. So the corporation tax rate lowered. And what related to our small business owners is the C corporation tax rate stay at 21%. The QBI deduction increased by 3%. So section 199A, that is the qualified business income deduction. So that 3%, let me illustrate to you what kind of saving you are looking at. We already have this 20%. That was very good. We had that for quite a while, since 2017 already. So now you are wanting, you know that it is increased. So let's say a sole proprietor earned 100,000 in qualified business income. Okay? So the old rule will reduce that 100,000 to 80,000. So you will pay taxes on the 80,000. The new rule will reduce the 100,000 to 77,000. So you will save money. You see that, right? So with that said, this is the proposal that definitely will be enjoyed by all of our small business owners. NOL carry back. I welcome this one to reality with both of my arm up. Like, I'm really happy to see this. The reason I'm happy to see this, because I see a lot of small, medium-sized businesses are running at a loss in year 2025. But one comfort coming to you with this particular bill, because the federal government allow you to take a loss of 2025 and go back to 2024 and the 2023, carry back and get refund coming back to your pocket. Net operating loss is important for business experiencing fluctuations. You might have good years in 2023 and 2024, but your year in 2025 just fell flat or crashed. If that's the case, you have a little bit of relief from this one. The bill restored the ability to carry back net operating loss for tax year 2025, 2026, 2027, 2028, 2029, back 2 years, back 2 years. Businesses can carry back up to 2 years, allowing to carry forward unlimited. So if business incurs a loss in 2025, it can put the loss back in the past, get some relief from there. All right. So now you know, when you finish your 2025 tax return and you got a loss, what do you ask your CPA to do? You ask them to do an NOL carryback for you right away. All right? So now, scenario, example, a small business has 300,000 profit in 2024 and paid 63,000 in taxes at a 21% of corporation rate. Remember, 21%. So 63,000. The $200,000 loss incurred in 2025, tariff, like President Trump encouraging Walmart to eat it. So Walmart eat the tariff tax, and then so maybe they will have a loss. So they had a loss in 2025. With this new NOL rule, the business can apply the loss they have in 2025 to 2024. So to reduce 2024 taxable income from $300,000, remember they made a $300,000 profit, to $100,000. So the IRS would refund $42,000 in overpaid taxes in 2024. That refund will be sent over to you. So yes, you lose money in 2025, but you also did not pay taxes for that amount of earning, that profit you made in 2024. Feel better, right? Feel better. So that is important. I hope this part will go through the Senate. So give a little bit of relief to the business people who are not doing very well with 2025. That is the overall message I want to give to you today. I want you to remember the process at the federal level. This one big, beautiful bill need to go through the House, and it actually survived the House by a very thin margin, but it did. Now it comes to Senate. Of course, if Senate makes any changes, it has to go back to get voted again, but so there could be back and forth. But the battle is 50% won by President Trump. So we are looking forward to see how that would come through. Of course, what we are talking about is just one piece of tax legislation, right? So there's other pieces, remember in one of the slides I showed you, the Medicaid, the energy stuff. So those are all part of the bill too. That's why it's called one big, beautiful bill. I don't share the same beautiful views as President Trump. My beautiful views is a little different than what he has, but because the view is very broad. It is not just what we are talking about here. So, but with what we know right now, that you understand, this tax bill would have benefit for small and medium-sized business. So with that said, keep your head up and work hard and try to make sure your business is doing everything to survive, to thrive. And one of the big things is on compliance side. Our firm, we offer payroll compliance review, which we teach you how to do it right. We review what you are doing and tell you what you are doing is good or not good. When we say not good, it's not just a friendly reminder, and if that not good becoming a thing for the government to hold against you, then you may be going to El Salvador prison. You don't even go back to your own country. You go somewhere else. So just be sensitive to the environment you are in and do it right? So very important. I always say that in every moment in history, there are always business being successful. And there's always successful in business. It doesn't matter what the period of time defines. So if you fail, don't blame the circumstances. Know your limitation. If you succeed, know that you have done a good job. So I encourage our small businesses owners to just put your heads together, learn, understand, do it right. That's the best advice. Anyone who is so sincerely for you, work for you, stands with you, and wanting you to do well would say. Someone like us, these partners, is right in front of you. And our partner's name is Dan Kim, Derek Saw, Dr. Steve Howe, Dr. Howe we call him, or we call him Professor Howe. When people call Professor Howe, I always think about the professor in Pokemon games, so mysterious. Sangmo and Kwan Chomjungwad, if you have a hard time to say her last name. All right, our website is right here, communitycpa.com. And you can email Catherine at communitycpa.com. She is the one that's mastering what I talk about in different time. Then you can also call us 515-288-3188. We are open 6 days a week, 8:30 to 5:30. I will talk to you again. Bye-bye.